For decades, the most trusted man on Wall Street was running the biggest fraud in history. In 1960, a young Bernie Madoff founded a small brokerage in New York City. He started with $5,000 saved from lifeguarding and installing lawn sprinklers. He named the firm Bernard L. Madoff Investment Securities. His real business was legitimate and genuinely brilliant for its time. He pioneered electronic trading and helped build the very system that became the Nasdaq. Madoff later served as chairman of the Nasdaq stock market itself. He was respected, soft-spoken, and widely seen as Wall Street royalty. But 17 floors up in Manhattan's Lipstick Building, a second business was quietly growing. This was his private wealth management arm, and the whole thing was a lie. Madoff promised investors smooth, steady returns of around 10%, year after year. Clients were told a clever option strategy called a split-strike conversion produced the gains. In truth, there were no trades at all, only paper invented to look real. His deputy, Frank DiPasquale, ran the 17th floor, fabricating millions of fake records. The entire empire was audited by a one-man accounting shop in a suburban strip mall. New money quietly paid old investors, the simple machinery of every Ponzi scheme. Feeder funds funneled in billions, drawing more than 40,000 victims across over 100 countries. Charities, universities, retirees, and even celebrities handed him their life savings. Nobel laureate Elie Wiesel's foundation alone lost about $15 million. In 2000, an analyst named Harry Markopolos took his doubts to federal regulators. In 2005, he warned the SEC in a memo titled, "The world's largest hedge fund is a fraud." He listed roughly 30 red flags, but the agency investigated and found nothing. Then the 2008 financial crisis arrived, and panicked clients demanded their money back. Madoff suddenly owed roughly $7 billion he simply did not have. On December 10th, he confessed to his sons Mark and Andrew that it was all one giant Ponzi scheme. The next morning, December 11, 2008, FBI agents arrested him at his Manhattan apartment. Account statements showed about $65 billion that had never actually existed. Actual investor losses were estimated near $18 billion in real cash. In March 2009, Madoff pleaded guilty to 11 federal felonies. That June, Judge Denny Chin sentenced him to 150 years in prison. His son Mark died by suicide 2 years later in 2010. A court trustee, Irving Picard, slowly clawed back nearly $15 billion, most of the stolen cash. Bernie Madoff died in federal prison in April 2021 at the age of 82. If steady returns that never dip taught the world anything, it's that too good to be true usually is. So follow Boom and Bust for more stories of money and ruin.